Here we examine the cup with handle pattern, which is one of the most powerful long-term patterns. The cup and handle, as you can see, is ideally represented by this particular symbol. And this is a particularly excellent one because not only do we have this well-formed cup and handle, but we have ideally the first initial shoot higher than the retracement down to that breakout line. And that retracement represents the safest place to get in because it's demonstrated the power of the pattern and yet given you a better opportunity, a second chance, if you will, to get in at a good price. Here's another example, hiding that line so you can see, picturing this in your mind's eye without the line before laying it down for clarity. Here we can see this example. We had really not even a second chance to get in because once it broke out of that cup with handle, it shot higher by about 400% over a few years, and ultimately much, much higher than that. But the initial move was quite substantial. Now, the other example here with BDX shows a instance where it looked like it might break out, but there was a bit of a double handle there. So you need to wait for that confirmation, that true break above resistance before the pattern is considered complete. In this example, the price move was again astonishing, moving from about $2 up to about $30. And that represents a 4-figure percentage price move over the course of the 90s. And here we can see 3M, an extraordinary example. Here on a split adjusted basis is the 70s and early 80s of 3M, merely 80 cents or so split adjusted. And quite interestingly, the crash of 87 collapsed the price, but just down to the breakout point. So the pattern still had meaning even in the context of the tremendous crash in October of 1987 before it went on to a huge gain. Chevron, another good example of a long-term hold on a split adjusted basis, only about 40 cents. Here's the cup with handle pattern, breakout at about 40 cents, and up it went. And this is a logarithmic chart, so it actually rather suppresses the size of the move, but this went up literally thousands and thousands of percent through the course of the 90s and the beginning of the new millennium, moving from 40 cents to, as of this recording, about $80. Here is another excellent example of the power of this move. Here's the cup, here's the handle, breakout, bit of an overextension beneath the breakout zone, but on a split adjusted basis moving from about 25 cents up to $100. So a 400x increase after that well-formed cup with handle pattern. Here is a less dramatic and more recent example. This is symbol ARRS. There's the cup, there's the handle right there, there's the breakout point, and we've moved up on this one by about double. And in instances like this, it's often wise to use stop losses on the way up because with instances like Chevron and 3M, where you get these gigantic moves, adjusting as the price moves up, adjusting the stop loss level is a way to help build long-term gains and insure yourself against basically losing all the profits in a calamity. Here's a good example of what would happen if you just took the buy and hold philosophy and didn't touch it. The cup with handle proceeded a very nice move higher, but it was all lost in a couple of years. It would have been wiser to have a stop loss to take into account the failure of that nice series of lower lows and higher highs. That is, higher lows and higher highs. One final example, Schnitzer, SCHN, illustrates again the tremendous power of this kind of pattern and the kind of gains that can be enjoyed.